Welcome, Banter fam. It's an absolutely critical time in the crypto markets, and you need to be paying very close attention. The price action we're seeing right now isn't just random noise, it's the market speaking to us, telling us where the big money is getting ready to move. After a very tough start to 2025, where we saw significant drops across the board, the market is now sitting at a pivotal point. We are hovering at key levels that will likely decide the trend for the next several weeks, if not months. Ignoring these signals is like driving with your eyes closed. This is the moment where fortunes can be made or lost, so it's essential to have a clear plan and understand the major support and resistance zones that are currently in play. The importance of these key levels cannot be overstated. Think of them as lines in the sand drawn by the biggest players in the market, the whales, the institutions, and the algorithms. When a price approaches a major support level, it's a test of the market's conviction. Will buyers step in with force, defending the line and pushing prices higher? Or will they falter, allowing sellers to break through and trigger a further cascade downwards? Similarly, resistance levels act as ceilings, where sellers are waiting to take profits. Breaking through these ceilings requires immense buying pressure. But when it happens, it often signals the start of a new powerful uptrend. We are at exactly such a crossroads today, June 13th, 2025. Let's look back for a moment to understand how we got here. The first quarter of 2025 was brutal, one of the most challenging we've seen in years. We saw Bitcoin hit an all-time high near $109,000 in January, only to end the quarter around $80,000. Ethereum and other altcoins suffered even more significant drops. This dramatic pullback was fueled by media group news headline about trade war affecting markets, worried investors reacting to geopolitical news at its distribute equally, fears of a trade war, a general shift away from risk assets, and the infamous Bybit hack in February that reset market momentum. Now, after months of consolidation and sideways movement, the market has built up a tremendous amount of energy. The question on everyone's mind is, which way will it break? That's what we're here to figure out. This isn't just about watching numbers on a screen, it's about understanding the story they tell. The current market structure is coiled like a spring, and the regulatory environment is adding to the tension. With the US government creating a Bitcoin reserve and the SEC softening its stance on crypto custody for banks, the long-term picture looks incredibly bullish. However, in the short term, the charts are giving us mixed signals. There are bullish indicators fighting against bearish warnings, which means we need to be more diligent than ever. In the following sections, we'll break down exactly what you need to be watching for Bitcoin, Ethereum, and key altcoins so you can stay ahead of the game. Alright, let's dive into the king, Bitcoin. Right now, Bitcoin is the main character in this market story, and everyone is watching its every move. It recently bounced beautifully off a crucial support zone around $107,000. This level is a major psychological and technical flaw, and the fact that buyers stepped in here is a very positive sign. If for some reason we lose this level, the next line of defense is down at $101,000. On the flip side, the immediate ceiling we need to break is the resistance at $110,000. A strong, convincing close above this level on high volume would be the signal that bulls are back in control, opening the door for a push towards the next major target at $112,000. When we look at the technical indicators, the story gets even more interesting. The moving average convergence divergence, or MACD, on the weekly chart is still showing us a positive bullish trend, which is great for the long-term outlook. However, we have to be cautious. The Relative Strength Index, or RSI, is flashing a potential warning sign, a bearish divergence. This happens when the price makes a higher high, but the RSI makes a lower high. It suggests that the upward momentum is weakening and that a reversal or a significant correction could be on the horizon. This doesn't mean we should panic and sell, but it does mean we need to be extra careful and watch for confirmation. So what does this all mean for you? If you are a long-term holder, these short-term fluctuations are mostly noise. The fundamental picture with institutional adoption and clearer regulation is strong. But for short-term traders, this is a critical moment. A rejection from the $110,000 resistance could be an opportunity for a short position, targeting the $107,000 support. Conversely, a breakout above $110,000 would be a clear signal to go long. The key here is patience. Don't jump the gun. Wait for the market to show its hand with a confirmed break in either direction before you commit your capital. The battle is on, and we're watching from the front row. One of the most powerful tools we can use right now is the liquidation heat map. This shows us where large pools of stop loss and liquidation orders are clustered. Currently, there is a significant amount of liquidity sitting just above the current price, especially around the $112,000 level. This acts like a magnet for price. It tells us that if Bitcoin can get enough momentum to push past the $110,000 resistance, it could very quickly shoot up to that $112,000 area to trigger those liquidations. This is why it's so important to use stop losses wisely. Don't place them at obvious levels where everyone else is. Instead, give your positions some breathing room to avoid getting wicked out by volatility hunters. Now let's talk about Ethereum, the queen of crypto. While Bitcoin is fighting its own battle, Ethereum is wound up even tighter, facing a massive wall of resistance. The price is currently stuck in a very tough range between $2,700 and $2,800. This zone has rejected price multiple times, and breaking through it will be a significant achievement for the bulls. The market remembers the brutal 45% drop ETH experienced in the first quarter of 2025, so there's a lot of fear and hesitation. However, the longer a price consolidates below a key resistance level, the more powerful the eventual breakout can be. We are waiting for that explosive move. For Ethereum traders, the most important word right now is confirmation. Do not try to front-run a breakout. Buying just below the $2,800 resistance is extremely risky, as it could easily get rejected again, sending the price tumbling back down. What we need to see is a strong daily candle closing decisively above $2,800, preferably with a big spike in trading volume. That volume is your confirmation that big money is backing the move and that it's not just a fake-out designed to trap eager buyers. Without that confirmation, you're simply gambling, and that's not how we trade in this family. We wait for the setup, we see the confirmation, and then we execute. If we do get that confirmed breakout above $2,800, the upside potential is huge. The first logical target would be the $3,200 level, which is a key psychological and historical price point. If the market momentum is strong, we could even see a push towards $3,600 in the weeks that follow. This is the kind of move that can deliver incredible returns, but it all hinges on clearing that initial hurdle. On the fundamental side, things are looking positive despite the Pectra upgrade delay. The massive growth of BlackRock's Buddle Fund shows that institutions are still very confident in Ethereum's long-term value proposition, which adds fuel to the bullish case. So the strategy for Ethereum is clear and simple. We are on the sidelines, watching and waiting. Have your alerts set for a break of $2,800. If and when it happens with volume, that's your signal to consider entering a long position. Make sure you have your targets in mind, $3,200 and $3,600, and know where you will place your stop loss to manage your risk. On the other hand, if we see a strong rejection from this resistance zone, it could signal more pain ahead, and a retest of lower support levels would be likely. The patience you practice now will be what protects your capital and allows you to capitalize on the real move when it finally comes. While Bitcoin and Ethereum grab the headlines, the altcoin market is where some of the most explosive moves can happen. However, it's crucial to remember that altcoins almost always follow Bitcoin's lead. If Bitcoin sneezes, the altcoin market catches a cold. That's why we watch Bitcoin's price actions so closely. Let's start with Solana, or SOL, which is currently facing a key resistance level at $167. A successful breakout here could quickly send the price towards targets of $180 and then $184. Keep an eye on the support zone between $143 and $146, as this is the major floor that needs to hold if we see a market-wide dip. Next up is XRP, a coin that has a massive and dedicated community, but has been capped by heavy resistance at 23.4 cents. This level has been a major roadblock, but the chart is showing a bullish divergence, which suggests that the sellers are losing steam. If XRP can finally break through this ceiling, the next targets to watch are 24.4 cents and 26 cents. The strong support for XRP lies in the 21 to 22 cent range. With spot ETF applications for XRP and other altcoins filed in the first quarter, a positive regulatory announcement could be the catalyst that finally ignites a major rally. But until then, it remains tethered to Bitcoin's movements. Then we have Chainlink or Link, a critical piece of DeFi infrastructure that has been trading within a well-defined range. The floor, or support, is at $12.80, while the ceiling, or resistance, is at $15.50. This range-bound trading is actually great for traders who like to buy at support and sell at resistance. However, the real money is made on the breakout. A confirmed move above $15.50 would be very bullish for Link, opening up the path to higher resistance zones at $16 and $17.50. For now, Link is waiting for a signal from the broader market before it makes its next big move. The common theme for all these altcoins, Solana, XRP, and Chainlink, is patience and dependence on Bitcoin. Their individual charts show potential, with bullish divergences and clear breakout levels, but none of them are likely to make a sustainable move upwards unless Bitcoin leads the way by breaking its own $110,000 resistance. Therefore, your strategy for these alts should be twofold. First, identify their key levels as we've discussed, and second, wait for Bitcoin to give the green light. A Bitcoin breakout is the tide that will lift all these boats. Don't get caught jumping into an altcoin trade too early, only to see it get dragged down by a Bitcoin rejection. So, with all this information, how do you actually trade this market? Let's put it all together into a simple, actionable game plan. The number one rule right now is to wait for confirmation. Whether you're looking at Bitcoin breaking $110,000 or Ethereum clearing $2,800, do not enter a trade until you see a decisive move with strong volume. Chasing a price as it's moving up is a recipe for getting wrecked. It's called FOMO, fear of missing out, and it's the most destructive emotion in trading. A professional waits for the price to break a level, maybe even retest it as new support, and then enters. This patient approach dramatically increases your probability of success. The second and equally important rule is to always use a stop loss. I cannot stress this enough. In a market that is this coiled and ready for a big move, volatility can be extreme. A sudden news event or a whale manipulation could send prices swinging wildly in a matter of minutes. A stop loss is your safety net. It's the mechanism that protects your capital from a catastrophic loss. Decide on your invalidation point before you even enter a trade. If the price goes against you and hits that level, your trade closes automatically. It's not an admission of failure. It's a smart business decision to cut a small loss before it becomes a big one. Good risk management is the foundation of all successful trading. This means never risking more than a small percentage of your portfolio on a single trade, typically 1 to 2%. It might not sound exciting, but this is how you stay in the game long enough to catch the big winning trades. It ensures that a string of small losses won't wipe you out. Right now, with the market at such a critical inflection point, risk management is more important than ever. The potential for reward is high, but so is the potential for risk. Your job is not to be a hero. Your job is to be a risk manager first and a trader second. In conclusion, stay alert and stay rational. The crypto market is at a pivotal moment, and it could move very quickly in either direction. We have clear levels to watch for Bitcoin, Ethereum, and our favorite altcoins. We have a clear strategy. Wait for confirmation, use a stop loss, and practice disciplined risk management. Do not let emotions like greed or fear dictate your decisions. Stick to your plan. The market is giving us a clear roadmap. All we have to do is read it carefully and act with patience and precision. Keep your head on a swivel, fam, because the next few weeks are going to be wild.